I told you there were two pieces of data that the market needed, or one big piece of data that the market needed before the FOMC meeting next week, and we got that piece of data. That piece of data was the PCE, which is a personal consumption expenditure, which is the measure that the Fed used to measure inflation. And we had a miss, ever so slightly. The market was expecting PCE to drop to 4.5%. We're at 4.6%. The previous reading was 4.7%. And so what the market is doing right now is it's just pulling back ever so slightly. Big question is, though, have we reached the end of this inflation cycle? Are we moving into a recession cycle? And that is what we're going to be speaking about today. We also got some big guests today. So I've got a big basket of things to cover today. We're going to be talking about the inflation problem. We're going to be talking about China. Is the US actually in a Cold War already with China? It sounds like it is. And today there was an article today by Ray Dalio where he lays out what he thinks is going on between China and US relationships. And, you know, we've been talking about this. We've been talking about de-dollarization and whether China is working with Russia and Saudi Arabia and all the BRICS countries to actually move away from the dollar as an act of war. So we're going to be talking about that. We're also going to be talking about a recession. Is there really a recession? I mean, I saw Microsoft earnings, I saw Amazon earnings, I saw Google earnings. Every single one of those earnings beat expectations. If this is a recession, what kind of recession is this? That's what we're going to be talking about. And what does this actually mean for Bitcoin? So listen, it's Friday. Wakey, rise and shine. Let's do this.
Get the fuck out of bed, bitch, go. Get up, and then they got go. Time to wake up, bitch, get up. Get up. Get up.
Wakey, rise and shine. Actually, I'm saying that to myself because after what Austin did to me last night, you guys in Austin, you're crazy. You're absolutely crazy. But I'm here and I'm bringing you crypto love and I'm bringing you crypto wisdom. So if you're here, say present, because I'm here, I'm present, even after the night that Austin gave me last night. If you're new to the channel, subscribe to our channel, the highest alpha per minute channel on the interwebs, that is for sure, specifically when it comes to crypto. Also, the most loyal and most amazing family in the world. And again, speaking of family, if you are coming to Miami, so hear me out. If you're coming to Miami and you haven't got a ticket to Bitcoin 2023, get your ticket to Bitcoin 2023. There may be a few left. You've got to use the Crypto Banter referral code if you do. And if you do, not only will you get the cheapest tickets to the event, but you're also going to be one of the 25 people that are coming for dinner with myself, Sheldon, Miles, Hustle. Every single one of us is going to Miami. So click this link over here and then use the Crypto Banter referral link. And if you're in the first 25 people, you'll be joining us for that amazing dinner. Also, remember, today's a big day. It's Friday. I've got three amazing guests for you on Friday. And we're going to be talking about big, pertinent, big issues. So Fridays, as always, are brought to you by NordVPN. They are the crypto VPN. Remember that if you're surfing in crypto and you don't have a VPN, you are exposing your IP address not only to hackers, but you're also exposing your IP address to DeFi protocols. You're exposing your IP address to exchanges. You're exposing your IP address to pretty much everyone. And not only does that make your crypto not safe, but in this regulatory environment, I don't care where you're at, you want to stay anonymous, and that's what you get a NordVPN for. If you click this button, you get to protect your crypto for less than $3.17 a month. And if you've already got a VPN, check out Nord's other products. I do know that some countries are banning chat apps and stuff like that, and I don't know. I mean, I'm not going to tell you what to do, but I have heard rumors that some people are actually using a VPN to bypass that. You decide what you want to do. Lastly, Gareth.
Yes.
How are your community doing in the trading competition, sir?
I think they're rocking it. I think overall my community is the most on point on a technical basis, and they will find the plays that continue to make them money.
Oof, I'm not doing so well. I woke up this morning. I was doing well yesterday, but I woke up this morning in position number 842. I'm down 11%, but I have hope. I have hope. Guys, if you want to enter the trading competition, there is a link below. It's capped at 2,000 people. We've got 1,225 people. Ends at the end of March. You don't have to pay for entry, but you have to have $250 in your account, and then you can win a Tesla, a Rolex watch, $10,000 in cash, and we're going to be funding accounts. And Gareth, who is a risk and return man, says that's the best risk and return he's seen on these markets for sure, right?
Yeah, no doubt about it. If you only need $250 to basically have the chance to not only make money on that 250, but then turn it into 40K or a Tesla, that's awesome.
You know what I always say, look, it's a small price to pay to actually test yourself and see how you're doing relative to others. Like that's, for me, that's like, I put in $250 and I just want to see how am I trading relative to others. And specifically if I've done your course, which I, by the way, did do the weekend when I had COVID, I landed up doing your entire course on two-speed. And a lot of people have done Sheldon's course. So
what you're saying is my course not only was great, but it also helped you get over COVID. Wow.
Yeah, look, I have finished your course, and I'm also saying that right now, well, okay, it's only one day, and I am trading with leverage. All right, listen, let's get into the alpha of the show because we have been here. We've got Gareth with us today. We've got two guests, one who has been on the show. You all know Harry Dent. He's editor of the HS Dent Forecast, someone who I first interviewed on my CNBC show in Puerto Rico. He told me the world was going to collapse. He told me we're entering the worst recession of our generation. A couple of years later, we're still here. There's a threat of another recession. We're going to catch up with Harry. Harry, welcome back, my friend.
Nice to be back.
And then we've got a new person on the show, Willem Middelkoop. He is a commodities trader primarily. He also wrote a book called The Big Reset. So he was the original. There is a book called The Great Reset, which was, I think, pirated from it. Are they paying you royalties, Willem? Are they paying you royalties on that?
You know, I was shocked that I wrote a book, The Big Reset, The War on Gold and the Financial Endgame in 2013. And then I revised it in 2016. And then in 2020, we had Klaus Schwab of the World Economic Forum. And he published his book, The Great Reset. So
if you want, we can get you an attorney and we can start suing him.
Would love to do that.
All right, listen, guys, let's get into the meat and potatoes of the show. So I think the first thing we've got to look at is just look at the numbers that came out today. We had the PCE numbers come out pretty much as expected, a slight miss. The market expected 4.5%. We got 4.6%. I'm going to give you guys an unpopular opinion. And the unpopular opinion is that inflation is on the way down, and that it was done with a big jolt of increasing interest rates. And I'm actually going to say that Jerome Powell did a great job, given the situation that he was in, starting to deal with the inflation problem very late. I think he did the best that he could do. Now, the market is actually now still forecasting, or more than ever, forecasting a 25 basis point rate hike at the meeting, which is going to take place, I think, next week. Yeah, I think it's the third next week, 87.7% chance. And then, if I'm not mistaken, in June, right now, there is another 25 basis point, which has kind of creeped in. How do you guys see what Jerome Powell's done, and how do you guys see the interest rate environment for the rest of the year? Willem, let's start with you because you're new.
Well, of course, the Federal Reserve and most central bankers lost quite a bit of credibility because first they said this inflation was only temporarily, and then they had to they had to pivot. Well, it's too serious. We have to, we're surprised by this high inflation. It's all because of Putin. And then they had to, really jack up all these interest rates. And now they're killing the economy. So they have the choice now to kill inflation or to kill the economy. And we all know the Federal Reserve might do another 0.25%. That's what the market expects, and then they'll stop. But this inflation comes in waves. If you look at the 70s, was a last era of high inflation. It came with 3 waves. So we've had the first wave of inflation. It's coming down now. And I don't care if it's 4%, 5%, 6%, but we'll see a pickup of inflation, I think, next year. And the second and the third wave of inflation will be
What?
really scary.
What would cause a pickup? And like I know what caused disinflation, and that was the Fed just printing money uncontrollably. I know what caused inflation to go down, and that was the Fed tightening their balance sheet or tightening on interest rates and trying to reduce their balance sheet. What would cause inflation to go up again? What would happen?
Well, you introduced me as a commodities trader. Actually, I'm a fund manager of the Commodity Discovery Fund, and we invest in listed equities, companies, smaller companies who are specialized in large discoveries on the metals, the battery metals, precious metals. And why am I telling you this? Because we study supply and demand of all these different metals, platinum, palladium, zinc, copper, you name it. And we'll get shortages, production deficits in almost all of these markets after 2025, to be specific. We already seen shortages in these markets. Palladium jumped 3x, 4x in 2018. Gold and silver are moving up. So it's about market fundamentals. I think it has to do with cycles. Harry can be, he's the specialist on the cycles part. We've had disinflation or lower inflation, lower numbers for over 40 years. We really broke out of this downtrend of declining interest rates. We're in an uptrend now, and I think it's a whole new ball game for the next few years, and maybe even the next few decades.
Willem, just before we go on, and I'm going to move on to other guests, but before we move on, I have two questions to you around commodities. So what would cause a commodities shortage is an increase in demand, right? Like if there's all of a sudden a huge increase in demand, that would cause a shortage. Where would an increase in demand come from? Is it a China thing? Is it China stimulating the economy and now all of a sudden requiring a lot of stuff? Because demand in the US is decreasing, right?
We just had our annual meeting this week. And I told our audience that this is the perfect storm for commodities now. We've had a bear market in commodities since, actually, I started the fund in 2008. If you look at the commodity index, CRB index was the top in 2008, has been declining and bottoming out ever since. But now this market is changing. We have a perfect storm for commodities because we have this very high inflation. I call it superinflation. We have the debasement of currencies, the ongoing debasement of currencies. Look at the national debt of the US. It was 10 trillion in 2000. It's 32 trillion now. And you really go, it's to the moon. And then you have the geopolitical tensions. And this is the new 800-pound gorilla in the room. It's the West against the rest now. And we don't want to rely on China anymore. So the West needs to build its own mines and especially in the battery metals, the lithium, the copper, the nickel. We in the West, we're scared that we're dependent on China. So that will increase demand as well. And we have this green revolution, the green revolution that will need a lot of commodities, especially copper, especially lithium, especially nickel. Look what the contents are of all these electric vehicles. And then we have the fundamental supply and demand for all these metals. We can't produce enough. The grades are declining in copper mines. The grades are declining in gold mines. So it's a perfect storm.
Do you see Bitcoin as a commodity? You say that you're a commodity fund a commodity trader, commodity fund manager. Do you when you look at Bitcoin, do you look at Bitcoin as a commodity?
For me, Bitcoin is digital gold. Actually, in the big reset, I named Bitcoin digital gold. That was in early 2014. So for me, it's the best form of money. Actually, if you look at the correct characteristics of money, Bitcoin is even a better form of money than gold. So I always compare it to if you have to choose between fiat or gold or Bitcoin. You might want to have a bit of fiat, a lot of gold, and quite a bit of Bitcoin.
Wow. Okay, Harry, what do you think? Interest rate cycle over? Interest rate increasing cycle over? Inflation cycle over? What happens next?
Yeah, this should be the last rate hike. First of all, I think the Fed finally, now this is 13 years of stimulus, okay? Any economy after 2009 that needs 13 years of nonstop stimulus is fundamentally weak, as demographics told me way before 2008, 2023 would be a weak period between the baby boom generation peak and the millennials surging again, okay? So they've been fighting this for a long time, but I think this was a critical mistake here. He overreacted to COVID. COVID was an outside influence, short-term virus, nothing wrong with the economy. $5 trillion in monetary stimulus and $5 trillion in fiscal commitment, 10 trillion, 50% of GDP stimulus. And that's what took us from 1% inflation overnight to 9.1% inflation. And then the Fed was forced to reverse from endless stimulus to tightening. And I say this economy is weak underneath. It's been living totally on stimulus, and it will not react well to this tightening. And I do think that's going to continue to show up. And this will be the last rate hike, 25 basis points. But I think we're going to be in a recession faster than people think. And it's not a normal, oh, the economy's overstretched, blah, blah, blah. This is a second financial asset bubble, bigger than the first one. This one totally artificial. And therefore, it's this bubble bursting in financial assets. And the top 20% that own 90% of financial assets are 50% of consumer spending. So I see a different type of recession that may turn into a short-term depression. It's just a deflation of the second major unprecedented financial asset bubbles. You had the roaring 20s, then you had the 90s, which was a natural bubble with some stimulus. This one is all stimulus, which means it's more artificial, more weak. And I think the market's falling is what's going to tip. I'm looking at the Russell 2000, the most clear chart to me right now, sideways triangle after this first big crash, which did signal to me a long-term top. It was big enough for that. We break 1700 here, 3% lower in here, the markets are going to head down. I think the markets or the financial asset bubble falling is going to draw us into this unique recession, because the affluent people that drive 50% of spending are going to get their asses kicked harder than any time in history.
Hold on a second. So play out the next 6 to 12 months for me. So Fed increases interest rates by 25 basis points in the next one, potentially another 25, or maybe they hold still after that. What happens then? What systematic thing would crash the market? Is it a banking collapse?
First of all, look at all the rate hikes, which I've done since the early 80s, okay? This is the biggest one in basis points raised. They don't have to do any more now. This hits, folks. Everybody should know this. 12-month lag. The 12-month lag on the March to recent raise in rates will just start to hit right about now in April and hit harder into early next year. I think the economy is going to weaken no matter what they do. They're dumbasses. The Fed has been you cannot run an economy on nonstop stimulus. You cannot say you believe in free markets and then not let the markets be free and correct and wash out debt and zombie companies when it needs to. That's what free markets do the best. It's not just success in entrepreneurialism and capitalism. It's failure. It's allowing failure. So this is a huge misunderstanding. I think the Federal Reserve understands nothing about the economy. How many of these guys, him included, Janet Yellen, for crying out loud, looked like she came out of a nunnery, okay? How many of these people have ever run a business or even had sex? Seriously. And they run our economy. Well, I mean, I really don't think all they do, they say, oh, he's doing a good job. If the economy's strong, they tighten, and if it's weak, they loosen. A 2-year-old could do, okay, a 4-year-old could do that.
Okay, hold on. Before I give the mic to Gareth, and Gareth, the mic is coming to you, I promise. If they phoned you today, Harry, and they said to you, listen, Jerome Powell's feeling ill, and you've been nominated as the replacement, so you are now taking Jerome Powell's role. You got to do it. What do you do? Like, as you walk in today, what do you do?
I would say no, because you want to walk in the president into a recession that's already baked in the cake, which some asked Jimmy Carter and some others. First of all, I would say the Fed is not in the business of regulating and driving the economy. It should have emergency injections when there's a real emergency. And COVID was a bit of that, but that would have meant a one-time injection. I would have had no problem with a $1 trillion injection in the early 2009 and that downturn, and maybe something like that in COVID short term. But to keep saying the economy has to go up and we can't have a recession, we would have no economy without recessions. If you don't understand that recessions are just as important in booms, like sleep is just as important as waking, then you don't understand the damn economy. So I don't think these people know anything. I don't think the Fed should be in the business. They should be providing enough money to conduct business and responding when there's a real short-term emergency, short-term. They should not be in charge of preventing recessions, which are the most fruitful thing the economy ever does. I know I was a turnaround manager for my first decade to small entrepreneurial businesses. I can make 10 times the change in a downturn I could when everybody's complacent in an upturn. Downturns, recessions are not bad. If you don't want a big recession, don't have a bubbly boom and overstimulate. And we've been stimulating nonstop for 13 years until last year. Insanity.
Gareth, I know you're calling for a recession towards the end of the year, right?
Yeah, and I think it's important, and what Harry's saying is absolutely correct, is that when you have a baseline, right, if you just keep recession so the booms are just a little up, then the recessions are a little down. It's when you stimulate, you create the huge bubble, which in response then has to have the big downside as well. It's just the nature of life, right? I mean, if you're going to do a lot of drugs, you're going to have a big crash on the other side. I mean, it's the same kind of principle there. So definitely 100%. I do see a recession coming in the second half of this year. I'm looking at it in terms of the jobs data. We're starting to see that crack in the last report. I think we get another one next Friday. We've seen the inflation numbers come down, but not enough to enable the Fed to step in. And that's the key, right? So, getting inflation from 9% down to 5%, easy, right? I mean, that's just, supply chain starts to work again, all that stuff. It's that last, 5 to 2 that's going to be the trickiest thing. And I think that's where people in the market, for me, I look at the stock market. I'm slowly moving in more and more into the short side of the S&P and the NASDAQ. And that's purely from the aspect of investors are in this phase of saying, okay, the Fed will rescue us no matter what, because we've been conditioned just like an animal. The bell rings and you run to get the food. That's the way the market investors are. The Fed, the difference here is that with inflation north of, let's say, 3%, I don't see how they stimulate in the same way, because then they're going to send inflation at 20%. Instead of 9, it's 20, right? And so that's going to be a shock for the investing public when they finally realize the Fed can't bail them out. Now, it's not to say the Fed's not eventually going to come to the rescue. We know the Fed is notorious for moving goalposts. Eventually 3% inflation will be fine. Eventually 4%, and it'll just become the norm. So yeah, I think recession second half. I'm not predicting a depression at this point. I think that comes later in the decade with the 100-year cycle, just like COVID and the Spanish flu. But I think this is the beginning of that table setting for it.
So, I mean, I think two things. I want to answer with two things. The first thing is, I think that the one thing that Powell isn't taking into account is the effect that AI is going to have on employment. We've seen just in the first, I would say that real AI is about 3 months old. Consumer AI, business AI is about 3 months old. Commercialized AI is about 3 months old. And already we are seeing a lot of companies talking about reducing their staff with AI. I don't know about how you guys are feeling, but I'm certainly seeing a lot of companies that I work with starting to reduce their staff by big numbers, because AI, just one AI chatbot has been able to reduce the numbers. And I think one thing that maybe Powell isn't taking into account is how many people will lose their job to AI and how quickly it would happen.
I was just going to say, you're right about that. But I think it's important to kind of recognize who the Fed is. And again, it's important to recognize the Fed is supposed to be independent, but reality, they're affected. They're humans, right? They're going to be affected by political pressure. They're going to be affected by seeing people suffering, right? It's just human nature. Like when you have that ability, and unfortunately, this is the issue, and they need to be stronger and not do this. But when you have the ability to help people in the short term, it's hard to say, no, I can't do it. I have to watch you starve on the street instead of printing a lot of money so you can have money. But ultimately, that's going to be the downfall, is that you really need a body that doesn't care about that stuff, that has no influence, being influenced by other factors.
I mean, tell me what a recession looks like, because I haven't seen a recession yet. Or I have seen 1 or 2 recessions, but I forgot what they're about. So is a recession a depression where people are on the streets, or is a recession just numbers are a little bit down, more than usual statistically, a little bit more people than usual don't have jobs, and that sounds to me like a kind of like a normal bottom in the cycle. I think it was Harry who said it. He said, if you're going to get really drunk, then expect to wake up this morning like I woke up this morning with a little bit of a hangover. It's like it's natural. I got drunk last night. I woke up with a hangover. I have 2 cups of coffee, and then I'm back on this. I'm back in business again. Or am I missing something? Are we going to get a 1929 style depression? I wasn't around for 1929, so maybe you guys can help me.
Not
Hey,
yet.
real quick, let me start on this one. This is important. Recessions follow normal business expansions, and you always have an expansion and always a recession. No matter what any dumbass economist says, we won't have recession, okay? What the difference is, depressions follow financial asset bubbles like the Roaring '20s and like 1995 to 2000. And so it's the financial asset. It's the sudden and near permanent disappearance of wealth. It's not so much people layoffs are going to cause this overexpansion, normal recession. This is a second bubble. Everybody's way richer. People are sitting in a $400,000 house that was $100,000, even adjusted for inflation 10 or 15 years ago, for crying out loud. You did nothing, okay? So you have to take this excess out. Everybody gets hit, but here is the big difference in a depression. The rich get hit the worst. It's financial assets that go down even more than the economy. Unemployment might hit, I have a 1.5 time factor to 2008. Unemployment was 10 or 11 then, it'll be 15 or 60 now. Stocks are down 57, S&P they'll be 86% now. This will be bigger, but it does hit the upper crust more. The everyday person get more layoffs. Okay, we're used to that. Rich people aren't used to losing half their net worth overnight. Okay, that hasn't happened. And every crash, even 2002, the NASDAQ was down 78% 2002, more than other. But it comes right back and makes new high. You mark my words on this and kill me if I'm wrong, because I'll probably be dead by then anyway. If we will not see new highs in these stock markets before I am dead. Okay, and I'm planning. No, give me 2040.
Yeah, Harry.
Will not see new highs.
Willem, I want to hear your view here.
Well, Harry has predicted 10 depressions in the last, I think, 20
and
years.
they fought them, damn it. And you go ahead. I'm telling you, this is it. They have blown the wad. They've been forced to tighten, so they can't tighten fast enough. The only thing had this economy going since 2009. That's why I say it was a huge mistake to overreact to COVID.
But I think
could have kept this thing easing up longer. I think he blew it. I think it's down because he can't turn around and loosen soon enough to prevent the next downturn.
Harry will be right one day, but not yet. Not yet. We have elections coming up in the US.
You want to take a bet on that one?
We'll see. We'll see one more blow off. I
want to take a bet. Hold on. I want to take a bet, but I want to hear what Willem has to say, and then we'll put some terms for a bet before the end of the show. Willem, go ahead.
We've seen this debasement of currency, lowering interest rates time and again for the last 40 years. They won't stop now, although we are in a new cycle and inflation is going up. And we have elections coming up. So as soon as the market starts to collapse, even before we see a real collapse, they'll print more. We've seen the same in 2020 during the COVID crash. So I wouldn't be surprised to see a new leg up for equities. We might even see new all-time highs, because once the market understands that the Fed stops increasing interest rates, we might get a rally. We even might get good news from the Ukraine, and then you have the summer and everybody's happy in the summer in the Northern Hemisphere. And then in autumn and the winter, we might go down and it might get a bit tricky, but then they will support markets again. They don't want to lose the elections, but after 24 or in 24 and after 24, then things will start to get real serious.
I mean, I must say,
you call support. I call it financial drugs. What happens in any drug addiction? It takes more and more to keep getting high until you take so much, you hit the floor and collapse. You can't do what they've been doing forever. They've been doing for 13, 14 years now. I think they've run out of options. They can't. What are they going to print? 10 trillion next time in 2 years? After 5?
Junkies
don't. I think by the time they do that, the market will be down enough that people will lose faith and see that, oh my gosh, they just printed 5 and we had a brief boom and ended up in another stock crash and deep recession. And we're going to believe that next time it's going to work. I think this is where they lose credibility. If they don't, then you'll be right.
Harry,
junkies
never stop.
We'll keep stand for it. I think people will say, I'm sorry, we've seen that movie before.
Junkies never stop. They just go on. You know, they just go on. You have to.
Right. Okay. Let me get you on heroin, and you can keep going on and going on. And I will predict at some point you will hit the floor and be in the emergency room. Okay. Yes, you can keep going on. You can't do it with something artificial, and this is artificial. Drugs are artificial.
But hold on. We say that, but they have been doing this with artificial money printing for a long time. I think I'm in the village.
I know people have been drinking a bottle of vodka a year for a long time, and they're starting to die.
They don't stop. And if I look at the markets today, I'm looking at the S&P 500 now. The S&P 500 is 15% away from its all-time high, which it hit last year around November. There is a good chance that they print again. And I actually want to maybe use this to pivot into the next part, which is for me one of the reasons why they may actually print again, which is the banking collapse or the potential banking collapse. So initially, the banks that went down were tech banks and there were crypto banks and there was stuff like that. But then we had, we've got First Republic, which, hasn't gone down yet. You can deny that it's going down. It's been almost bailed out by all the other banks where they all deposited money into it. Do you think that the increase in interest rate can actually cause this banking collapse? Because if there is a banking collapse, the only tool really that the Fed has is the same tool that they've used up until now, which is printing money. We saw that when Silicon Valley Bank went down and there were liquidity fears. What they did was they actually just put more money into the banks. Do you think that that's the tool that they have? Do you think that's what's going to happen?
I think they have a few more tools available. We could have a dollar devaluation, could have a gold revaluation. There are many, not many instruments, but there are some instruments left. And we've seen with the collapse of the banks, the Silicon Valley Bank, they print money right away. We saw the increase of the balance sheet of the Federal Reserve. It was up a few $100 billion. If we have some more problems, we'll see the balance sheet of the Federal Reserve increasing again. But there's something much more important at stake, because we only talk about the dollar here, and we talk about the dollar system and the Federal Reserve. We haven't said one word on the de-dollarization yet. And there are now over 140 countries who don't accept the US rules of the game anymore. They didn't join the US in the sanctions against Russia. Most of them have China as their largest trading partner, which might help explaining why they don't support the Western sanctions. Many now receive funding from China. They don't look for funding with the IMF or the World Bank. And many of these 140 countries are considering joining the China-led BRICS alliance. Even the Saudis, even Mexico consider joining the BRICS. And the Saudis already ended the petrodollar deal. They accept all kinds of payments now, also in yuan or other currencies. So that's the big shift. And the US will keep printing money. The de-dollarization will continue. And that's the big news for me.
Wait, hold on a second. So I think maybe actually this is a good time to talk about it. Gareth, I want to start with you. Is de-dollarization real? And the reason why I say that is, I've heard de-dollarization for many, many, many years. It does feel like a little bit more of a reality now since the Russia-Ukraine war, where Russia kind of, I think, put the ball in motion by starting to sell their oil in yuan. It does feel like there's pacts between Saudi Arabia, which has actually been part of the petrodollar, now saying, look, we don't really care about the petrodollar. We're moving on. It does feel like all of a sudden there are a lot more headlines about people or countries moving away from the dollar into yuan, but the yuan is still actually pegged to the dollar. So, the yuan is not a floating currency. It's pegged to the dollar. So you may as well be trading in dollars, no? Gareth, am I seeing this right?
Yeah, I mean, number one, de-dollarization is definitely happening. I think there's a lot of fear that's spread around because of it. In reality, am I making a trade today on the collapse of the dollar? No, right? I mean, am I tucking some gold away? Yes, gold, silver, metals, Bitcoin eventually, absolutely. But it's not something that like is going to happen overnight. You're not going to wake up tomorrow to a dollar being worthless. We're not Weimar Republic, right? So I think that that's something that people have to hear, because I've seen so much on social media panicking about this. I had a friend that I hadn't heard from in years message me, "Hey, do I need to exit all my dollars?" And it's like, not quite yet. I mean, it's one of those things you need to understand is coming, but it's not like a do or die scenario right now. Now, having said that, there's no doubt that China wants to be the reserve currency of the world. They're trying to destabilize this by working with countries all across the world to start trading in digital yuan. We know Saudi Arabia is doing trading in oil and so forth in other currencies as well. So it's coming. It is in process. It's just not going to happen overnight. And the way you know that, by the way, is when you see fear hit this market, the stock market, where does the money go? It still goes back into the US dollar, right? So as of now, that's the case. But again, every investor out there needs to be aware that this is happening. The dollar will slowly become the non-reserve currency of the world, and you will see the dollar lose power due to that. And by that meaning, the U.S. will lose power as well. We know that the U.S. uses that as a reserve currency to maintain order that they see fit and control, and that will slowly slip away. China wants that control.
Before we get to you, why did we get here, Gareth? Is this because the US abused their power, because they used the dollar as a weapon? Because is that the reason why?
Yeah, that's part of the reason. I mean, part of it is financial, craziness of printing money. I mean, again, if you look historically at the reserve currencies over the last 500 years or longer, there's a time life, right? There's a lifetime of a reserve currency. And we're kind of right at the end of that for the US dollar. So number one, that's just the nature of it. And by the way, it's not that there's a time frame on it. It's just that countries do not have the discipline to not print their own currencies. When you have the crazies running the crazy house, they're going to do whatever they need to do to maintain power, which is printing money and so forth. So it's just the nature of human nature, frankly.
Harry, what do you think? And Willem, I'm coming to you because I know you got very strong views here when it comes
I mean, this is very demographic. Europe was the center of the world, 1500s and 1800s, and America rose and was the new place, and huge immigration and capitalism and all this sort of stuff. We became it. Now it's just moving to Asia. The progress has moved, from west to east for all of modern times. Okay, so the dollar cannot be the central currency in the future. It's natural. I see the dollar only getting strong as a safe haven, just as it did in 2008. By the way, it went up. The dollar and treasury bonds went up 40%, right, in the worst of the crisis. It was the safe haven. So the dollar will be favored if we go into this recession that a lot of us are agreeing is likely. And I think it will be more a short depression. But we come out of this, the US is going to grow a lot faster than Europe. We're still the strongest developed country, major developed country. But Asia is going to have all the growth. And it won't even be China, okay? China is not going to throw its weight around after this. China is going to get hit the hardest. 22% empty homes, enough to house everybody that'll ever migrate from the rural. They've already gone to 60% urban. They get to 80%. They've already built all those houses to stimulate their economy. So they didn't print money. They printed condos, okay? So China is going to go down in the worst debt restructuring in history. And they're going to come out of this week. But Southeast Asia and India are going to be the future. And so demographically, the growth in the world is just going to move towards Southeast Asia and South Asia, India, and Asia altogether. China will still be big. It just will not be growing like it did. And so ultimately, you're going to have, I think, frankly, by the time we get to this realization, the best standard for future money will be, guess, Bitcoin. Bitcoin could become the standard, the gold for the new because it is digital and it is neutral and it is more limited, as somebody said earlier. Bitcoin could end up being the standard for a digital economy globally, where everybody has to tie to that. And that's why when Bitcoin goes down to 3,000-4,000, that is my forecast, 10,000 minimum. Even Michael Turpin, my big crypto guy down here, my friend, sees at least 10,000. Then I'm going to be buying Bitcoin. But I do think that crypto. That's Christo Jobs. Somebody said it's the digitization of all financial assets and money. When somebody gave that at my own conference years ago, that's when I said, oh, now I get it. I don't understand crypto up and down. Man, that is what it is. It is a new form of money.
So
Bitcoin's only potential function is to be the standard because Ethereum does a lot more work.
So Harry, are you saying that right now you would, if you were allocating your currency, you'd be majority in the US dollar, from what I'm hearing?
Yes, yeah, now that's right. And by the end of 2024, I would see the dollar slowly. I mean, it's going to go up and down, but it's going to go down. It's going to be overvalued by then, no question. After 2 deep recessions, just as a safe haven. Okay.
I see Willem warming up for the next.
Yeah. This is a topic I love. The subtitle of the Big Reset, you can download this for free on the website. It's the financial endgame. I've been studying the financial endgame, for over 10 years. And I just wrote a little piece for my on my Patreon account. And I wrote that the petrodollar deal of 1974 was the foundation, was essential for the dollar to remain the world reserve currency after Nixon took the dollar off the gold standard. So for the last 50 years, the petrodollar deal was the foundation for the strength of the dollar. But now, it's the end of the petrodollar deal. And I'm not the only one saying this. I have a text here in front of me of Credit Suisse, 𝗙𝗵𝗿𝗆𝗆. You might recognize that name. He's a former Fed official. He wrote March 7th last year, 2 weeks after the Russian invasion. He wrote a wonderful piece. You can find it online. It's titled Bretton Woods 3. We are witnessing the birth of Bretton Woods 3, a new world monetary order centered around commodity-based currencies in the East that will likely weaken the euro-dollar system and also contribute to inflation in the West. I will read 2 more lines. A crisis is unfolding, a crisis of commodities. Commodities are collateral, and collateral is money. And this crisis is about rising of outside money. After this crisis is over, he says the dollar is valued a lot lower. This Credit Suisse, there's not some gold bug.
So if you were allocating your currencies, not your investments, but your currencies today, kind of like how would you allocate your portfolio in terms of currency allocation? What percentage would be in the dollar? What percentage would be in the euro? Would you have anything in the yuan? Would you have something?
I always look at the big cycles. And if you look at the dollar index, actually, this is the first time this crisis after the Silicon Valley Bank, people didn't flee into the dollar. The dollar is down almost 10% over the last few months. So this is the first time when we have a crisis where people don't flee into the dollar. And if you look at the dollar graph, but take the 60-year, the 70 chart, you see 3 major tops for the dollar. And every top is a lower top. So the dollar is in a long-term downtrend. And the last rise we've seen in the last 2 years for the dollar, we topped out in October, November last year. I think that's a major top. It's a lower top than the other major top. So we're in a major downtrend for the US dollar. But, when crisis hits, some people might start to flee again in the dollar, but we don't see it now. And if you ask for my currency allocation, I see gold as a currency. I always have this model portfolio, 25% of your investment in real estate, 25% in equities, 25% in physical gold and silver, and we keep 25% in liquid assets like Bitcoin.
Only Bitcoin or Bitcoin and Ethereum too?
I prefer just Bitcoin, but I'd like to keep it simple. You could add Ethereum. Bitcoin is a digital gold, Ethereum is a digital silver.
Okay, but what if for someone who's allocating into Bitcoin, what if I said to you, look, you've got something that is more used than Bitcoin, that's called Ethereum. Every time it's used, you burn some Ethereum. So unlike Bitcoin, which is mildly inflationary, as we all know, because of the algorithm, Ethereum is actually deflationary.
It's not decentralized. And, the amount of Bitcoin is limited, 21 million. And that's what makes Bitcoin the best store of value, the best digital asset as a store of value. And this is such a rare opportunity, and it's still cheap.
What about 𝗵𝗵𝗆𝗆, the meme coin? No, I'm kidding. I'm kidding. Okay. Yeah. Okay. I want to talk about this article that Ray Dalio wrote, which is what he thinks is going on with China-US relationships. etc. We've touched on it, I think, in the de-dollarization, but he does make some big statements here. He says the US and China are on the brink of war and are beyond the ability to talk. That's a huge statement. There's another bunch of big statements here. There are many red lines that will be pushed up against with brinkmanship over the next 18 months. Each one is risky, and together they carry a lot of risk. And they talk about Taiwan, they talk about Chinese militarization, they talk about economic sanctions and stuff like that. Do you guys think that there is this, I'm going to call it a Cold War, because I think the Cold War is the best term that I can use, between China and the US?
It's a hot war already in Ukraine, and the rest is a Cold War. But these changes are so important to understand, and I agree with everything in his piece. But the changes which have just started seem like irreversible. But you should be aware, especially you guys in the US, that there's a big change ongoing in Europe. We've seen France, Germany, and even the foreign minister in the UK, all three making clear that we should stop supporting a unipolar world centered around the dollar. We should start supporting a multipolar world. Both France and Germany and the foreign minister in the UK have said this. So Europe understands that China is not our enemy. China is the US enemy because it's a threat for the US dollar system. But there's a great, there's a fight ongoing in Europe that we should stop following the US blindly.
Wow, I mean, stop following the US is a big statement. Gareth, what do you think? Are we in a Cold War, hot war? I don't know. With China, where are we at?
Yeah, I agree. I think it's definitely a Cold War with China. China is slowly trying to take the U.S. down, and it's kind of Belt and Road development, kind of becoming the biggest player. China wants to be that major influence all over the world, the one that's in control like the U.S. has been for so long. So I absolutely agree. I think this is just part of the plan for them. And do I think that they really care that much about Russia in terms of maybe supporting them? No, I don't think so. I think it's more in their bigger scheme of plan of what they're trying to achieve by destabilizing the U.S. and ultimately destabilizing the U.S. dollar. So it's all this kind of complex thing. I agree that ultimately you could be starting that hot war like we know is going on with Russia and Ukraine, and you have all these countries that they're into that war with just little bits, right? It's just a little bit of here, a little bit there, but it ultimately creates the potential for a world war type of situation.
So this is the chart of the BRICS GDP versus the G7 GDP. And I guess if we look at what China is doing now, it's very much centered around the BRICS countries. And you look at the G7, so it does feel like China's taken a side, and the side that China's taken is the one that's on the uptrend versus the one that's on the downtrend, no?
Yeah, absolutely.
Real quick, let me say that. China, I think, is a paper tiger, over leveraged. No country would have 22% empty homes and not be in a depression, okay? So I think China's whole stature in the world, and they're the next big thing, and they're going to overtake, and they're going to pass US. I don't think they ever pass the US in my lifetime, okay? Number one. Although they'll still be number two for a long time. So I think their status kind of goes down, and that really opens up for Southeast Asia and India to emerge. The power is with Asia in the future, but China has made a huge mistake being a top-down, non-democratic, non-capitalistic country, over-investing, overdriving their economy beyond anything in history. This bubble burst will decimate their image. They are not going to be seen as the big guy who's going to take over the world in 2 or 3 years, if I'm half right. Okay, so China's going to get taken down a leg. That's going to be good for the balance. In other words, we won the Cold War with Russia over time because we were the better, stronger system and economy. Same here. We're not as strong versus them as we're Russia, but we're going to come out of this a lot better than China. And China's fall is just going to raise the rest of Asia. So I'm not worried about China, being the reserve. No chance. My forecast, no chance the yuan becomes the reserve currency before
I hear you. I think I hear you, because I think as we had a guest here on Banter, I don't remember who the guest was, but he said, you think the US is bad with their high debt and bad policies and bullying? China's a whole lot worse. And is that not a case for maybe everyone to move onto a currency that is not aligned to one government or one country? And I'm making the point for Bitcoin. It doesn't necessarily need to be Bitcoin. It can be a neutral commodity-backed currency. I mean, is that a reality? Because every country has its problems. China, as you say, autocratic, top-down approach, highly leveraged, no transparency. US, I'm going to just leave this over here. And I mean, if this was a company, everybody would be selling its shares. I mean,
this is not a binary situation. It's not a choice between the dollar or the yuan. You move away from the unipolar world to multipolar world, which means we'll keep trading in a dollar system, especially the Western allies of the US. But the BRICS countries, they already moved away from the dollar system. They're trading in yuan, and that will see a strong increase in yuan-based trade. And I have a study here of ING Bank, who are predicting that they will introduce a gold or commodity-based, joint currency of the BRICS. There's this BRICS conference in Johannesburg in August this year. You can expect some news. So don't look at the system as a binary system. You know, you can have many forms. And China, the BRICS countries, led by China, they just propose to countries in Europe or Latin America, you can choose, you can trade with us or you can trade with the dollar. And don't expect the Bitcoin to be the new world reserve currency, because there's only one country who has Bitcoin in their national reserves, and that's El Salvador. And all other countries have gold as a financial reserve. So revaluing gold is much more beneficial for them.
Do you not see, I mean, El Salvador started, in El Salvador was a proof of concept.
Who followed? Who followed? Nobody.
I mean, give it time.
Nobody. No, why would a central banker choose to invest in an enemy? It's decentralized. They can't control it. You can only have Bitcoin ruling the world when everything has collapsed, and that won't happen anytime soon.
Wow. Okay. So with that in mind, what is your thesis to buy Bitcoin? If you think that Bitcoin is
the more debasement of currencies will have, the more people will start to understand you have to hedge yourself by investing in the real gold and the digital gold. And that's a very small world, and the digital silver. And that's why gold, silver, and Bitcoin are going up since the Silicon Valley Bank disaster and dollar went down.
Okay, so look, we got about 3 minutes left. In the 3 minutes, I want to get your trades for the next 3 to 6 months. So just to set the terrain, I'm going to go and I'm going to say long NASDAQ, long Bitcoin, short US dollar, long gold. Those are my trades. I see Gareth smiling because Gareth, what are your trades here? So next 3 to 6 months.
I'll take the under on the NASDAQ. I say short NASDAQ. Long gold, I'm agreeing with you. Bitcoin, next 6 months, I still think it's headed lower first, so I'll take short on the Bitcoin.
All right, and anything else, Silvers? I mean, you don't have to stick to the same thing. I'm just trying to get a mood. This is like checking the pulse.
Yeah, so with silver, for me, it's a trickier trade. Gold's the pure play. Silver has industrial side to it, so if we do hit a recession, it's going to be a little trickier. Longer term, I think silver still goes up. It's just a trickier play in the near term. I would say short Apple, short NVIDIA. I think, again, you're looking at a recession second half, and some of these valuations on some of these NASDAQ stocks have gotten ridiculous again. I would say short 𝗵𝗵𝗆. I would say these crazy crap coins that are going right now is a huge concern for me. It's not a signal of a bottom, it's a signal of a top. So just people out there, be careful out there. There's a lot of crazy pump and dumps going on.
Harry, I'm going to leave you to last because I'm assuming that it's going to be a very, very, very dramatic ending. And so that's
it's very simple. Short stocks, short crypto, which is just the most exaggerated sector of the equities and the risk level, and long the highest quality bonds in the world, despite our deficits, TLT, TMF, long treasury bonds, 30-year treasury bond, the best. So short stocks, short crypto, long treasury bonds. That trade should work until the end of the year, then you revalue.
Willem.
I'm an outlier. I expect a huge run in all markets for the next 3 to 6 months. And
That's what I said.
One of the most interesting markets is, of course, gold. Gold has been in a trading pattern which had a top around 2000 for over 10 years. We're on the verge of a breakout that will cause a huge run for all, precious metals related stocks. I think commodities will do well because if you look at the PE ratio for the commodity producers, it's 6, 7, 8, it's sub 10. So expect a huge run there. And silver is gold on steroids. And silver is trading 50% below its 1980 price. It's the only metal which is so discounted. So I expect the precious metals to do well, but I expect equities to do well as well because there's so much money. And where do you go with your money?
So you say long gold, long silver, long NASDAQ, long Bitcoin.
Yeah. For the next 3 to 6 months.
Short dollar, long dollar.
Even the dollar could see a run because it has been declining since for the last 5 to 6 months. I wouldn't be surprised to see an uptick there, but I wouldn't bet on it.
Wow, guys, listen, it's been amazing. I woke up this morning, I was tired, I had a headache. I feel great now. So thank you. Much love from me, from the Banter fam. Willem, welcome to the fam. We loved having you. We loved your views. Harry, great to see you. Gareth, you're basically part of the, you're going to be the CEO here soon. So, that's how it is. Sending you guys much love. Thank you for coming on Banter on behalf of everyone. Hopefully we'll see you guys again soon. Thank you.
Enjoy your weekend.
Thank you. And to the Banter fam, you guys stay online with me. Let's have a quick chat about what's going on in the crypto markets. First of all, did you see the Brian Armstrong videos? I don't know if you guys saw them, but I think it's very, very, very cool, but also very sad that Brian Armstrong has to fight the SEC in the case of public opinion. For those of you who haven't seen it yet, I quickly want to get this for you because I think it's important that we just spend a few minutes talking about crypto and the crypto markets because we're going into a weekend. I'm going to be on a plane, not going to be able to do that many shows, but I do want to bring you guys some shows. So this is a video that they made. Hold on.
To the chair, other commissioners, and staff of the Securities and Exchange Commission, I want to thank you for this opportunity to speak directly to you. My name is 𝗙𝗿𝗄𝗆. I'm Coinbase's Chief Legal Officer. And with me is Brian Armstrong, the Chief Executive Officer and Chairman of Coinbase. I'd like to start by turning things over to Brian to say a few words. Brian?
Yeah, thanks, Paul. So again, thank you for the opportunity to respond to this Wells notice. And I thought I'd share a few words just about the founding story of Coinbase and why
the founding story of Coinbase and whatever else. But then they end off by saying, this is where this guy is a legend. Okay, listen to what he says.
Coinbase will defend itself vigorously in litigation if it comes to that. But it does not have to come to that. We will show up at your offices any day, any time to discuss a workable path forward for our industry. But we won't find that path without true dialogue.
Imagine he phoned you and said that he'll show up at your offices any day, any time. I'd be shitting myself if that happened. I've got to be honest. A couple of hygiene points, things we need to talk about. And if you have any questions, yeah, we should talk about them. Also, I'm looking to see if our research group has any research for us. Okay, remember, number one, trading competition. If you haven't already entered, there is a little bit of space. When we get to 2,000, we stop. Do it. It's early enough to enter, early enough to win. Second of all, NordVPN, support these guys. Guys, these are the guys that protect your crypto for only $3 a month. They hide your IP address. You need to do that, especially in the realm with what's going on. Guys, I hate saying this because I'm so scared that my videos will be removed from YouTube. But if you are trading on DeFi apps and those DeFi apps get subpoenaed by the SEC and you're in the wrong jurisdiction, that's it. You are part of the files that get to the SEC or whoever's subpoenaing the things. But if you use a VPN, you mask your IP address and you decide where you want to go, and that's the thing. Then lastly, I want to show you a very cool product. Full disclosure, my brother is the guy that invented it, or he's the founder, one of two founders, two very smart guys. So I don't know if you guys know what MEV is. MEV is a term which is called maximum extractable value or miner extractable value, and it refers to what the miners or the validators do with your transactions. Now, what they do is they front run you with certain bots, which capture value out of your Ethereum transaction. So it's almost like if they see you trying to buy Ethereum for $1,950, they can front run you. They can buy it for $1,948 and then sell it to you at $1,950. That's called front running, very, very simplified front running. Now, as a result, you lose what is called MEV, okay? You lose MEV, but there is a link below to a site which is called, the company's called Blink. The site is called, it's over there, you can see it's called 𝗍𝗍𝗏 mine extractable value pawn. If you connect your wallet, and it is safe to connect your wallet here, and you press the button, what you can see is you can see just how much MEV you've lost. And I want to show you an example of people losing. This guy here lost $131,000 in MEV. This guy here lost $59,000 in MEV. These are just people that have checked. This guy lost $54,000 in MEV. This guy lost $33,000. Now, what Blink does is it actually gives you back the MEV. So it protects you against the MEV and gives it back to you. Okay, so and that you can do that with one touch of a button. So there is a link below. Click on this MEV pawn thing, connect your wallet, see how much you've lost. And then once you've done that, I don't have any wallets connected to this laptop because I'm traveling with this laptop, but go and click on that. And with one button, you can actually protect yourself against MEV and get all the money back. So go and do it. It's a cool thing. And then lastly, I see there's some bit of communication coming here from the guys. Okay, there we go. So there is communication from Miami. There are 4 tickets left, 4 tickets only, which are left for the event in Miami. If you want to join the event in Miami, there is a link here. You got to use this link plus the words crypto banter when it says coupon code. When you register with that link and that coupon code, you don't only get a ticket to the Bitcoin Miami 2023 conference where we're all going to be, but more importantly, you also get a dinner, free dinner with all of us. So it's just when I say all of us, Sheldon, Miles, Kyle, Hustle, Fred, me. We're going to all go out for dinner. 25 people are coming back with us, for dinner. All you need to do is buy a ticket. If you don't buy a ticket using that link, and there's only 4 tickets left, then you're not coming with us. If you do, let's do it. And let me tell you, I was at a party last night here in Austin. We were at the Crypto Banter meetup with Life. I met the most incredible people. I do want to show you just how cool the fam is. I actually tweeted about it. I met a lot of, I met a whole lot of really cool people. Really cool people. But then I met this couple who came from, they came from about 2 hours away to see me. And they literally just came for the meetup. And they brought me these amazing candies, sweets, I don't know what you call these things, which are absolutely amazing. There's a link here on my Instagram. But more importantly, like, this is a couple where the wife is ill and she created this to be the legacy for, she wanted to leave something to her kids. She's studying medicine and she wanted to leave something for the family, for the kids. And so she created this business and she gave me a whole lot of samples. They're absolutely amazing. Why am I telling you the story? One, because I think you guys should follow them on Instagram, help them out. When you're in the US, maybe order 1 or 2, just support members of the Banter fam. She's sick, she's undergoing chemotherapy. She created this business because she wanted to leave some legacy to her kids. Yes, a really great story. And the reason why I'm telling this is because I know that everybody out there in the fam has an amazing story. We are one fam. I do want to spend as much time with everybody. We had a great time last night. I really got to know people on a very personal level. People bringing us gifts, people coming to take photos with us, people just spending days with us. And it's just amazing to see the impact that we're having on people's lives every single day. These are people that were willing to drive 2 hours to come and see us and 2 hours to come back, and came and gave me gifts. It made me, it brought tears to my eyes. And I can't tell you how delicious and how amazing these gifts, I'm actually seeing if I can get one. I'm going to go get one just now, but these gifts and sweets actually are. So if you do want to follow them, it's an amazing business. It's, like businesses with a story, someone who's made an amazing, delicious product, businesses with a really cool story, like a really cool story. That's the site over there. It's called 𝗙𝗿𝗐𝗂𝗏𝗆 Cartel. There she is. She looks great now. She looks great. She is on chemo. She is recovering. But it's just great to see that there's everybody in the Banter fam has a story. And you know what the biggest thing is? That we're all in this together. We care about each and every one of you guys. We want to meet each and every one of you guys. And that was really been, for me, the highlight of being here in Austin, is actually meeting the fam. And I really want to meet you guys all in Miami. Whether or not you come to the event, whether or not you can afford a ticket, that's great. If you can join us for the dinner, join us for the dinner. We did try and get you the tickets for free, but they wouldn't give us free tickets. So we decided that if you buy a ticket, you'll get the best discount, and then we'll also invite you to the party. We will be doing some other stuff today. Someone go and buy some 𝗏𝗏𝗏𝗏𝗏's dried mango. Trust me, it is absolutely addictive. I'm supposed to be counting calories now, and I'm trying to get this whole six-pack and whatever else, which I'll update you guys about another time. But they ship to anywhere in the world, by the way. But yesterday, when I opened one bag, and it was just like, wow, hold on, like, oh, and that was like one bag gone. So do me a favor, if you are around and you do want to support people and actually get an amazing, incredible product, just go follow them on Instagram and just order one or two and just like give them some love. This is you know what these people are? These are salt of the earth, amazing, good people trying to get financial freedom, and they come to the family for their financial freedom. And we try our best to change lives every day. And, one of the questions that he asked me, he said, what's the best token that you'd buy now? And I said, I can't even say that to you, because everything I actually do, I do on the show. That's what I do. So with me, as you know, I can't hide shit from you guys. I tell you guys what I do when I do it. Sometimes I'm right, sometimes I'm wrong, but we're all in this together. And it's just very cool for me to get stories from the fam. I'm getting more and more of the stories from the fam every single day. So much love to you guys. Tomorrow I'm flying back to South Africa, so from Austin. So no show tomorrow on the weekend on Saturday. There is a chance I'm stopping in Dubai on Sunday because there's a layover, and I've got like 2 or 3 hours in Dubai. If something's happening in the market, then I will do a stream for you guys on Sunday. Otherwise, I'll see you guys back on Monday. Normal time, bringing you Crypto Lab and Crypto Wisdom. Sheldino's back on Monday. Carl's back on Monday. We're all going to be trading like mofos in the trading competition. I'm sending you guys much love. Ray, I'm sending you much love, my friend. Haven't seen you for a while, but I know. Are you smoking a spliff? It's 8 o'clock in the morning, bro.
It's 8:15 here, Los Angeles.
Okay, I mean, yeah, if it's 8:15, then I think it's great. Yeah, I mean, yeah. If it's
4:20 somewhere.
If it's 8:15, it's cool. I mean, yeah. Guys, listen, much love. See you guys again soon. If you're here in Austin, I'm going to the conference now, so come and hit me up. Hola, let's have some fun. Tonight, we're out again in Austin. Let me know if there's anything else happening. Love you guys madly. See you guys again on Monday or Sunday. Until then, have fun and trade well, my friends.